Much has been said lately about the dismal returns produced by actively managed funds. Only around 1% are able to outperform the market consistently. But just as shocking is how much you're actually paying for that underperformance. Now, these figures we're about to show you are for the United Kingdom, but total charges in the UK are not too dissimilar to those in most countries around the world. Let's say you're lucky enough to inherit £100,000 and you're wise enough to put it away for 40 years for your retirement. What charges can you expect to pay? Well, a typical annual management fee is 0.75%, though some investors pay far more. On its own, 0.75 seems fairly modest, but the management fee is just the start of it. There's also a platform charge of around 0.35% and an average advisor charge of 0.82%. Initial advisor charges, annualised, come to 0.24%. Then there are fund custody and administration costs, which average 0.17%. And on top of all that come transaction costs, and these can be pretty much anything depending on how much trading your fund manager chooses to do. You really don't know. But we need to put a number in here, so we'll say 0.41%, which is the average figure for transaction costs. And that means the total cost of investing, on average, is 2.74%. Now, you might have a look at that figure and say, OK, it's not an insignificant chunk, but surely it can't have a dramatic impact on the returns I end up making. To which I would give a one-word reply: compounding. The effect of compounding can be huge. You see, you don't just pay those fees once, you're paying the same percentages over and over again. And as the value of your investment grows, so do the pounds and pence charges you incur. So what impact do those sorts of charges have on the value of your investments over the long term? Well, let's assume an annualised return of 8%. 40 years on, when you're ready to retire, that means the £100,000 you invested would, without any charges, be worth £2,172,452. And after charges, a mere £777,203. So your actual gain would be just £677,203. That's because the effect of your total charges would have reduced your potential return by a staggering £1,395,249. That's right, more than 2/3 of your potential gains have been lost. Now just think about that for a moment. You've provided all the capital, you've taken all the risk, and yet you've only kept less than 1/3 of the returns. It's a similar story for investors in North America, Australasia, and most of Europe. Investors in Southern Europe, most of Asia, and Central America are paying even higher charges than that. Now you can see why, for sensible investors, keeping costs low is an absolute priority.